We're talking about GameStop stock.
Look at that shirt.
Yeah, you like that? It really whips the llama's ass, Chris.
Love it. Love it.
Yeah.
Asif,
Hell yeah.
Sorry for
give
the
us the
distraction.
give
No,
us
it's all
the
good.
rundown on this because this has been maybe one of the wildest weeks we've seen in GameStop, even in a like series of wild weeks that have been going on throughout the last year.
Yes, that is true. I actually just wrote a story about the massive move GameStop has had this week. It's actually up 96% from the low last week. So you basically, if you bought shares when everyone was saying the trade was over and they were doomed, you basically doubled your money in 7 days.
Mhm.
If you're a degenerate like me and maybe you bought some call options, you could have even returned more, which is hilarious and stupid. Yeah, it's weird. People, a lot of outlets try to explain why stocks go up, right? It's always the story will be XYZ stock up on blank news, right?
Mhm.
What's really interesting about this at GameStop is that the stock is one story and the company is another story. So the company reported earnings last week. They were terrible. They missed, I think, expectations by negative 250%. So they were expected to be profitable. They weren't. They actually lost almost 3 times as much as people expected them to make.
Yeah.
Uh, so that's viewed as bad, right? Main Wall Street analysts were like, if they can't make money in a holiday quarter, they're doomed, right? But the stock was already down a ton this year going into the announcement. I
Yeah.
think at the lows of the year, GameStop was down about 60% for the year since January 1st. So it had already kind of been beaten down. Expectations had been lowered. And at $80 a share, it was trading for basically 1 times its revenues for the year 2021. That company actually brought in revenues of $6 billion. Now they spent more than $6 billion to do that, which led to this push and pull last week where the shorts. I have said this quite a few times about people short GameStop. They're greedy. If
Mhm.
you were making, let's say you shorted it at 150 or you shorted it at 200 last year, you should have covered last week when it got to 77. A lot of people didn't. So we're seeing, we saw the conditions that existed last year in GameStop that led to these violent moves, where the stock would shoot up 100% in a day or to $350 or 400 or whatever. Those conditions are still here. And one of the news stories that we broke out was that Ryan Cohen bought 100,000 shares earlier this week. Yes, $10 million, which is nothing to sneeze at, even if you're a
Yeah.
billionaire. Kind of shows that he sees value in the company at these valuations. Kind of like I said, if you look at it on a price to sales basis, GameStop is actually still relatively cheap relative to a lot of other online retailers and other retailers. So, like, less mature retailers, I should say. So, you saw him buy his shares. The stock was already up, I think, at about 120 per share when this news broke, and it just added fuel to the fire, pushing it closer to 160 this week. So that's one element. Ryan Cohen announced that he bought some shares. Larry Cheng, another director, bought some more shares. I learned that I had more shares than Larry Cheng earlier this week, which is weird.
Mhm.
I'm not on the board of GameStop. Maybe I should be. Uh, but yeah, that was weird to see these insiders finally buying. It's a vote of confidence, no question. The
Yeah.
other data point that came out on the earnings call is that 8.9 million shares have been directly registered with ComputerShare, the official transfer agent of GameStop. When you do that, you take those shares away from brokers so that they can't be lent to shorts. So there's about 75 million shares of GameStop, right? 8.9 million of those are not being lent. And also Ryan Cohen has about, I think it's 11.9 million shares at RC Ventures. Those aren't being lent to shorts. So you start to add up these numbers, and it's close to a third of the float, which is not being lent to short sellers right now. So when you look at their short interest is around 20% of the stock, you back out all of these shares that aren't really available, the short interest is closer to 40-50% of the stock. If you don't take into account intraday shorting and stuff. Another anecdotal bit of evidence that I saw actually today on my own broker at E-Trade, the cost of borrowing shares of GameStop has gone from 2% to 5% in a week. That doesn't sound like a lot, but that is a shit ton of money if you're short $1 billion or $100 million of GameStop. To maintain that short overnight or over a week, you need it to drop to pay for that interest, right? The reason that the interest rate is rising is those two things I mentioned: insider buying and the DRS of shares. So there was a lot of debate about if DRS, direct registration of shares, was the right move. About 8 months ago, there were some shareholders who thought this was the way, others that didn't. The reason that they're doing this is because some people believe that there are more shares of GameStop out in the world than actually exist. Right?
Mm-hmm.
Last year, we had a short interest of 120% or 200%, right? There were so many shares lent by Citadel and other market makers that it is entirely possible that either there were more shares than existed or are more shares than existed. And if we can get the DRS to the point where there's, I don't know, let's say we get to 30 million directly registered shares, and then Ryan's at 11 some million, and then Vanguard has 9 million, and State Street has, or whatever other mutual fund has, I think BlackRock has like something like 8 million shares. You start to add all these things up, and you're like, well, there's the float. So how the hell is this still being shorted? And I think that's the fear that's in this stock right now. It's not a fear. There's two kinds of fear that I think are governing this price movement. There's the fear that I should have fucking covered at 77 and I'm getting my ass handed to me, right? If you're short. And there's the fear of missing out, right? People who saw the stock at 77 and didn't buy it, and now it's up 100% in a week, and they're like, crap, I should get in now before it goes up another 100%. Not saying it's going to, just talking to the market psychology that leads to moves like this. So there's two things. There's bears that are screwed, and there's bulls that are falling over themselves to buy stock. So I think that those two things are coming into play here too. So I don't like to say GameStop was up for XYZ reason, but here are the reasons that it is up this week, and you can do with them what you may. But yeah, it's really fascinating that they had a terrible quarter, right? And it capped off a very poor financial performance year for them.
Yeah.
But people are still seeing value here because the revenue story. And I know not everyone really gives a crap about NFTs, but having an NFT marketplace for GameStop is viewed as bullish by some people. Not everyone, obviously, but to me, I look at it like my valuation of the company does not include anything good coming out of the NFT marketplace at all. Like, I just think GameStop is pivoting to becoming an online retailer, right? Offering same-day deliveries. And they even admitted it. They took a hit on earnings last quarter because they wanted to satisfy their customers, right? Yeah. They probably took a hit to get the inventory of PlayStation 5s and Xbox Series whatever's last quarter. And yeah, they're definitely making some... They're not making money off of it, but they're definitely getting some customer loyalty out of it. You know, the Power Up Rewards Pro memberships, I think, are up to like 5-point-something million people now, which was up 30% from the previous year. And they did that where you have to be a Power Up Rewards Pro member to pre-order these console bundles. So that's how they kind of got people. And then the other thing they did, they started bundling really crappy games with these consoles. So when I got my Series X, I paid... part of the bundle included not FIFA, I wish it was FIFA, Madden, NBA 2K22, and COD Vanguard.
Little bundle.
And that's $180 there, Donovan, that I didn't want to spend at all. But it was the only way that I could get the Xbox. So not that these are really... Oh my God. Bad Katie, I'm going to get you an Xbox someday. I promise. That's a good
Oh
question,
man.
though. One of these days, I will find one. But yeah, like I think the bundling of software with the hardware led to that revenue beat. They did grow revenue year over year by like 3 or 5%, which isn't like a whole lot, but the thesis has always been GameStop is really doomed because software sales are dropping. Used game sales have fallen off a cliff entirely. It was 80% of sales about 10 years ago, used game sales. Software now in general, they don't even break out new or used. Software sales in general are at 30% of GameStop's revenue. The problem here, their margins suck on hardware sales. They don't make a whole lot of money on console sales. They don't make a whole lot of money on these monitors they're selling. They're selling computer monitors now. They're selling like actual PCs. You can buy Razers. I think they have a relationship with Alienware and Dell now.
Yeah.
Yeah, all
And
that stuff is no margin.
that's like 0% margin, Chris. And then if they have to facilitate same day deliveries of these things or, fast delivery, that's where you're seeing them lose money. So it's like a good and bad news thing for them because PC gaming sales were up 130% for them year over year, but the margins on that stuff is killing them right now. So it's like at some point, GameStop needs to turn a profit. They have about $1.4 billion of cash, only $40 million of debt from a coronavirus relief fund in France. So outside of that, they don't have any debt that they have to service, right? So it's not that of a pressing issue. But if they keep losing money, especially at the pace that they lost last month or last quarter, they only have about 10 quarters of runway. So they need to make money, right? And that was the quarter where they're supposed to make money. So I kind of think that they viewed 2021 as a kitchen sink sort of thing. Let's tank this year. Like football teams do it, basketball teams do it, right? So they can get a better draft pick the next year. In the case of a financial performance, if you tank your performance in 2021, it makes the year over year comparisons that much easier in the next year, right? So I think that they may be doing some of that. They did a ton of hiring. Um, they did a ton of hiring on the blockchain side of things. They've hired a ton of people away from Amazon, and Ryan has brought in a lot of his friends from the pet company that he had, Chewy, right?
Yeah.
Chewy being a pet food online portal or whatever you want to call it, and a lot of those people that helped Chewy take on Amazon are now at GameStop helping GameStop take on Amazon and Walmart and Best Buy. So yeah, that's kind of basically all the reasons around this movement. But at the core, it's the fact that this stock they didn't cover. The shorts didn't cover. You should have covered. Like bulls get greedy, bears get greedy, right? And I think last week we saw bears getting greedy and hogs get slaughtered. So that's what this week was. Uh, yeah, it's wild. And I wouldn't be surprised if we're still talking about this a week from now or a month from now. Uh, a lot of people were messaging me last week telling me to get out of GameStop. It's a short. It's going to $50. All these things, and when you see an overwhelming sense of negativity around a topic, I tend to be a contrarian on those things. It's like in the past where Nintendo's doomed, right? And they should be a third-party developer. And you've heard that refrain from Michael Pachter a few thousand times by now, and he's always wrong. But yeah, I think we're seeing a similar sense of hate around the GameStop story. And then on the other side of it, you have these folks that call themselves the Diamond Hands or other unsavory words. Like they're not selling. I'm not selling. And the condition for the squeeze is still there. And I think that's probably the biggest takeaway out of anything. If you follow Ryan Cohen on Twitter, the chairman of the board of GameStop, he has taken multiple shots at short sellers in the past week. He's also in a fight with this company that's trying to sue them for $30 million that are owed from 2019. He's just really changed his attitude in general with how he's communicating with people.
I
Yeah.
remember I was gonna say I
Go
remember
ahead,
seeing a
Ryan.
tweet like probably a little bit over a week ago. I think it was when a GameStop stock was like trending downwards or whatever one morning, and someone tweeted was like, "On what news?" And you had quoted it, and you were like, "Sometimes the stock just moves. Like
Mhm.
there's not always a direct one to one for it." So,
Well, the stock market in general, 90% of the volume of trades are done by computerized algorithmic trading in dark pools or even just on the NASDAQ itself. So it's companies trading shares back and forth with each other every few milliseconds, churning essentially to make some money. And when you buy 1 million shares of GameStop and you sell it a millisecond later, you take whatever tiny fraction of it and you put it in your pocket, right? That's what's going on right now. And in the absence of a rule called the Uptick Rule, you can short things indiscriminately in the stock market intraday. You can, if there's no one on the other side to buy it, if there's a vacuum of buyers, you can tank a stock really easily right now because there are no rules to prevent that from happening anymore. That's why I don't know if you remember back in 2010, we had this event called the Flash Crash, where like Procter and Gamble traded for like a penny at one point. Um, it was around the Deepwater Horizon accident that occurred in the Gulf, and also there was some fear about a Greek debt default at the time. The whole market, like, completely crashed, and there was when you have this many computers that are in charge of the volume, you have like I always tell I've been telling my friends a lot because people have been asking me about all sorts of stocks during this sell-off, right? This market is selling off ever since the war in Ukraine kicked off. I'm like, don't be a hero. Like, none of us can actually be the hero that buys the stock that stops the decline. Wall Street has to decide that they're going to stop the decline, right? Because even today, the people buying these shares they're probably the same people that got killed last week, right? So either covering shares or flipping the trade entirely because of momentum, right? So there are technical reasons why the stock went up this week, and I think that they're probably more to they probably explain this move better than anything. So from just a real quick explanation of it, uh, GME traded in January at a high of 160 and 31 cents and a low of 86.29 per share. In February, it traded inside of January's range, right? So it traded with a low of 95.08 and a high of 132.85. 132.85 is an important number for computers here. The stock went below both February and January's low on that earnings announcement, but it reversed back inside it. At the point that GameStop got above 132.85 per share this week, a buy signal showed up on the monthly chart. So that's an active buy signal above that through the end of this month. So that takes us to basically Thursday of next week. So computers that are rules based and are looking at momentum saw this signal and started buying it. So that was what was really weird about Ryan Cohen's disclosure. The stock was running ahead of that, right? Like, he bought the shares between 96 a share and 108 a share. That day, the stock closed in the 130s, and then the next day it was in the 150s. So I don't know if someone knew what was up because he only bought 100,000 shares, and it was something like 9 million shares traded that day, 24 million shares traded the next day. Today, I think it was something like 13.4 million shares traded. This week was 65 million shares. And like I said, there's only about 75 million shares of the company. That's like a crazy amount of the stock to trade in 1 week.
And just like that jump to go from $80 up to where is it at right now? A little around 160?
152.60.
That is absurd. That is such a twist in 1 week.
Yeah, and it's like you went from the company's on the verge of, at least the narrative, the company is doomed and they're losing money and this turnaround isn't working. There was a story that Reggie Fils-Aimé left because they didn't have any idea what they were doing. Again, Reggie was at South by Southwest talking smack about them. Is it good for GameStop? Yes, it is. When the stock goes up this much, it's great for them. And the way that they've structured the way that they've structured their CEO pay, yeah, it was Lucci Dobra, man. I'm happy to see you, bro. Yes, it is good for them. But yeah, the way they've structured their CEO pay and their executive pay, it's very options heavy and stock-based compensation heavy, which means they have to get the company turned around to make money, right? It's not like Bobby Kotick, who gets paid, or who was being paid hundreds of millions of dollars to just be an asshole. This is quite the opposite. Like, they have to do well to make money. And I think that's an interesting dynamic from a management standpoint. I like owning stocks where the owner, like the executives, own shares because they have skin in the game.
Yeah. And I mean, like, it, I'm not crazy about the NFT marketplace, but it's a company that's continuing to use that momentum to transform and become more sustainable, which is like you look at, conversely, AMC, which is just floundering, just reaching and grasping for any straw that it can get its hands
They
on to
invested
stay
in a
relevant.
fucking gold mine last week, TJ. Like a gold mine that was literally on the verge of bankruptcy. Adam Aaron's like, we're gonna buy some stock in that, and it's like, we also have NFTs, and we're gonna sell. If you watch Spider-Man, we're gonna give you an NFT of your ticket. Like, no one cares. No one wants any of that. And it's like, I don't like solving problems that don't exist, right? And I do think that you can make the argument that NFTs are that, right?
Mm-hmm.
I'll throw this out there because I don't care if people run with this story or whatever, if you think I'm crazy. Or if there may be a non-crypto based version of this that would work too. GameStop was a used game seller, right?
Yeah.
We talked about that earlier. It used to be 80% of revenues. Now it's not even disclosed, right? What if NFTs are a mechanism for selling used digital games on their marketplace? Basically, each copy of a game would be a minted NFT, and when you're done with it, you could sell it. No one else is doing used digital game sales right now. And I just think that that is one element of this that people might be sleeping on.
They'll
would be
never get the
interesting.
publishers to agree to that.
It doesn't matter, Krabs, because it's not about Ubisoft and these mainstream companies. They have $150 million from Immutable that they are giving grants to developers for. It's not like they're not running into a game publisher's office and saying, you got to do this. They're like, who wants to do this with us, kind of thing. So I don't think it's going to be mainstream developers doing such things. I think it's going to be indie and inexperienced devs, honestly, who are more of crypto enthusiasts than they are gamers, right? That's what you're seeing with the play to earn model in general. I agree with you that you're not going to get Microsoft on board instantly, but they have been very cagey at Microsoft about NFTs. They have not said no to NFTs. They have just said, yeah, we're watching it.
Yeah,
Same thing with
I don't disagree that NFTs are going to take over everything. I'm just not sure that anyone's ever going to want them or it's going to make money. Like, assuming this thing goes well for GameStop and they have a few games that people are buying copies of once or two or three times, is that really enough to cover their overhead for the thousands of retail locations they've got that are not making margin on anything else? Because, like you mentioned, all the shit they're pivoting to, there's no margin. Like, there's no future for them doing what they're doing.
That's a great question. No.
Like, does this company have any value outside of their retail, physical real estate presence?
Yes. I think so. I think that you have to look at them based on their sales, right? If there's a point at which GameStop could actually, why I think it's an interesting criticism, Chris, and it's valid. It was said about Amazon for 20 years, right? Amazon's margins historically terrible,
Still are.
and they still are. Because
but is there
retail,
room in the market for GameStop to become even 40% as big as Amazon to where they can finally flip that seesaw? I don't see that.
I don't see GameStop becoming a 400 or 800 billion dollar company. No. But is it possible that a company with $6 billion in sales could somehow turn a profit with all these things? Yes, it is. What needs to happen is a shift away from the hardware sales back towards software. This is one way for them to do that. The other thing that becomes interesting is if they actually have a successful NFT marketplace, if I could ask them one question about it, is what are you going to do with the cryptocurrency that you receive? Are you going to keep it on your balance sheet, or are you going to sell it and turn it into dollars immediately? Because if they keep the crypto on the balance sheet, that becomes a whole other risk to short sellers, right? Especially if it's Ethereum. So if you're sitting on Ethereum and it goes up in value, it's one of these things, Chris, where whatever they're getting on the crypto side of business, if crypto appreciates, could end up paying for operations. That's what's interesting. But that requires more than just the NFT marketplace being successful. It requires crypto to quit crapping its pants, which it's been doing most of the year.
Yeah.
But I think it's a very good point you bring up. The reason why I don't have much pushback about this, but why I think it's interesting is that they have people developing games for the Immutable platform right now. Immutable has this game, Gods Unchained, that's already done crazy amounts of revenue. And this GameStop platform is going to exist on top of Immutable's platform. So everything that's on sale on the Immutable platform already is going to be available there. But yeah, no, I get what you're saying. I just think that there are elements of the NFT movement that resemble the free-to-play movement. That's all I'll say. They're not there's not a one-to-one correlation or anything, but the amount of hatred towards NFTs right now is very similar to the amount of hatred we saw at the advent of free-to-play. And I think that that's like one thing that's kind of interesting here. But yeah, I don't know if the NFT marketplace is a panacea for their problems, to answer your question. I think the answer to that is to shut down non-performing stores, which they've been doing for 10 years, you know? And then focusing on actually getting, at some point, this company realizes they have to be profitable. So the question is, will it be software? Will it be crypto? Will it be hardware? Will it be online sales? And when you have a billionaire chairman of the board who seems to want to keep funding your company, I think that they're giving themselves the runway to see if this plays out. But it's a very good point you bring up, Chris. Can they turn a profit at all? That's a great question. And then I hang out in a lot of these GME circles and, on Twitter Spaces and stuff. I talk to these folks. I read the subreddits. The shareholders don't care, Chris. That's the interesting element here. Is most of the time shareholders would be very upset if a company missed on earnings by 250%, right? Instead, everyone's like, "Hey, the stock's on sale. I'm going to buy some." So that goes back to that market psychology talk that we kind of started off with. Is that I think there's like animal spirits involved in this stock that go beyond the actual company. And it's this movement of retail investors against Wall Street is still very much in play. And this stock is like ground zero of that. This is like Occupy Wall Street, but it's actually working. And I think that that's something you cannot properly discount into this.
I always like hearing how nothing's more important than the shareholder, as that's been the reason for all my problems with games over the last 20 years. Save for the, chain harassment and assaults from, our friends at the chain harassment and assault publishers that we normally report on in this section each week.
Yeah.
Yeah. No, and I agree with you. You're not going to see mainstream game devs get involved in this marketplace at first, and that's going to put a cap on it. But if, for instance, I'm going to put this out in the universe. If, for instance, there was a Charizard NFT, Donovan, how much would that be worth?
I regret to say that it'd probably be worth a lot of zeros behind whatever number. They'll probably sell for a lot of money.
Yeah,
Sadly.
because that's the other side of this, is that GameStop values collectibles. Collectibles have been a huge part of their turnaround already. I think it's somewhere around 15-20% of revenues now. It used to be 1%. That acquisition of ThinkGeek played into that. Like, they have a lot of collectibles, right? Already, physical ones. So NFTs are kind of an extension of that for them. If they can create digital, like, Have you guys seen the South Park episode where Butters is shilling NFTs?
No.
You guys really need to watch that episode. Anyway,
Uh,
GameStop is Butters. Like, GameStop's not going to put too much skin in the game. Like, the investment that you're talking about, Chris, it is in the hundreds of millions. But like I said, they have 1.4 billion in cash. They didn't bet the company on this marketplace, is my point. If it doesn't succeed, they just shut it down. Right? It's like Congregate.
like going back to your example of they will make a percentage on the resale of this Charizard NFT or whatever.
Mhm.
What incentive does Game Freak or Pokemon Company or whatever that owns the rights to that issues it initially, why would they give away their cut to GameStop?
Because they don't have a marketplace. Like, how you would have to go on OpenSea, still give them your cut. Like, where do you sell an NFT? You have to go to a marketplace for it.
Yeah.
Unless you, and because Pokemon doesn't want to build their own damn marketplace. They don't want to take that risk, right? So it's way easier for them to send a JPEG of a Charizard to GameStop and let them worry about it. They just cash the check. It's not unlike licensing their content to a TV publisher or something. You know, like,
Yeah.
I think.
But we've seen in those markets, including games, the moment that there's money to be made, that the licensing goes out the window, and everybody rolls their own.
Yeah.
If there's any money involved in it, and then just becomes an even worse, awful market for everybody that's not the shareholder.
So at that point, what you're saying is that GameStop ships this marketplace, they take share from OpenSea, Ubisoft does one Assassin's Creed card, and they're like, hey, we made $100 million of one stupid card. Maybe we should make our own. And then Uplay pivots to an NFT marketplace, an Epic Games Store pivots to an NFT marketplace. If that happens, that's like what happened with Tesla. It's like, oh, you proved the concept. It worked. And you have a lead now. But you're right that a lot of these first parties would just make their own thing, right? So that's why they're building it with this $150 million grant, right? To pay smaller devs to make things on the platform. And then that there's some, what do you call them? Like thresholds that they can hit that they unlock more funding for that thing. So I don't know. I think that's a good point. But I think if that's true, if like what you're talking about is true and actually happens, GameStop will have already succeeded on the NFT side of things.
But wouldn't they have to immediately pivot to some other market, because then that is dried up as soon as the licensors are, like with Netflix, having to make their own stuff or they go away?
Like GameStop becomes basically a publisher.
Yeah.
Yes, I think that's very possible.
It just seems like a lot of what ifs and conditional stuff just for a hope. Like a
Well,
lot of
and
things have to go perfect.
That's kind of what I was going at earlier too. Is that like the NFT market is not something that I'm initially thrilled about. It's an opportunity for them for sure, but the thing that makes GameStop a continuing contender and an interesting story is that they're transforming their company with a lot of more feasible things in the short run, as they also set up this NFT thing. Like they put up like what, 3 or 4 new online ordered fulfillment centers within the last couple years, if I'm not mistaken. So like they're transfer, and then also the monitor sales, all the hardware. Yes, that doesn't have good margins on it, but the fact of the matter is they're building into things that they ought to have been doing already, and things that make sense for them to do in their everyday business in the short run. And like that's the kind of stuff where like it's not just opportunities that they're taking on trends, it's also feasibly it's sensible things that should be part of their business strategy already.
And it actually is going to lead to some customer loyalty. I will not buy a physical game from Amazon. I won't do it. Because so many times have I seen friends pre-order a game from Amazon only to get that email that you're not getting it until 3 days later.
Oh, that's the same as GameStop. They never have a fucking pre-order.
I mean, I beg to differ. I've gotten a lot of my pre-orders through them. I haven't been getting physical games very much, but my hardware, I've been buying through them. I bought my Series X through them, my PS5 through them, and my SWOLED through them.
But like going back to the thing TJ said about pivoting to the monitors and GPUs, like the physical space they need to hold one GPU, they can have 8 Funko Pops, and they make way more margin on a single Funko Pop sale in a random store than they do on that GPU. Like,
But
I don't.
that's what's interesting. They're not putting the GPUs on the shelf.
But they still have to physically hold them somewhere. Like,
Yeah, in that facility in Florida and the one in Nevada.
I guess
like,
the question is, why would you take the risk on the no margin thing that takes up 10 times the space?
I think it's to breed customer loyalty. Hey, I got it. Like, I'm gonna throw this out there. Have you heard of cult stocks before?
No.
Like, Apple was a cult stock. People worshipped Steve Jobs, right? They're like, oh, he's the greatest. And it becomes a self-fulfilling prophecy because you bought Apple for 60 cents and it's trading for 170 now. It's made you a millionaire, so you're loyal to them for that sense. But you're also loyal to that guy because you think he can do no wrong. Another example of this is Elon Musk over at Tesla. Tesla is very much a cult stock. The people who invest in the company become very dedicated customers, right? I call it my reverse Apple dividend or my reverse Nintendo dividend. I give Nintendo money knowing that it's going to come back to me because I'm a shareholder. There are now about 900,000 people out there who are very loyal to GameStop because of everything that's happened in the last year. I can't explain it because the way the company has behaved pre 2020 gives no one any reason to be loyal to them at all. But because this stock was at the center of this revolution in retail investing, it has bred a huge group of people who are loyal to it. And it's inexplicable. There's like no reason for these people to be loyal to GameStop, but everywhere you look in the GME Twitters or the subreddits, GameStop is viewed as an anti-Amazon stock. It's the little guy. It has that going for him. So I think that they're selling these things, Chris, at really shit margins because, hey, I actually got a GPU from them. Or, hey, I actually got my SWOLED from them. You know, like, people are excited that they can't even get anything right now because the amount of shortages out there. So I think they even said it on the call. They were focusing on customer satisfaction over profitability in the short term because they can retain customers that way. And then you get Power Up Rewards Pro members who have held on to their membership for years. I think that's an element of it that explains some of what you're talking about. But I agree with you. Until there's an actual profit reported, I think people will always question this stock. But that was true of Tesla, that was true of Amazon, and that was true of Apple in the second coming of Steve Jobs, that 96 to 2010. And obviously, Apple turned a profit way faster than I think GameStop will. And obviously, Tesla is far more innovative than GameStop, right? But I think that GameStop, because Amazon has become almost too big for its own good, is in an interesting place here where it's not unlike Apple versus Microsoft in the 90s, right? You went with Apple not because they had better hardware or anything, it's because you just wanted to be different. And I think that there's an element of that to this GameStop story that is not founded in logic or reason at all. It's more just a feeling that people have.
That's scary.
Yeah.
Well,
You should jump in a Twitter space with me sometime. It's scary as fuck to listen.
Unlike Apple, GME is not on the front of inventing multiple markets that didn't exist before. Like, I don't feel like that can be compared apples to apples at all.
No, it's not. And I said the same thing with Tesla. Like, Tesla's far more innovative than what GME is doing. But in the video game retail space, who is actually innovating at all? Like, no one. It's not like Walmart's changing the game. It's not like Target's changing the game. Video games have largely become commoditized when it comes to buying them. Most people don't have a whole lot of loyalty at all when it comes to buying a video game. It's where can I get it cheap or where can I get it now?
And you think that because they got an overpriced GPU this year at GameStop, that in 2 years when they go back and they have the choice between Walmart and GameStop and Walmart has it $5 cheaper, they're going to keep going to GameStop?
Not everyone, no. But some people, yes. People who own the stock will, and it's very weird, but that's the way.
It just feels like a super limited niche of potential customers to bank anything on.
That's fair, but at the same time, like, there are just people who you buy what you buy whoever has it, right?
Right.
And this holiday, GameStop had consoles. They did. We don't have exact numbers, but
Yeah.
They sold more than they did the year
Th-
before
They
with
also
chip shortages.
tied a lot of their their console sales and their like any particular hot button commodity into their power up rewards, which was another smart idea, which was another smart play by them because
That's
that was
recurring revenue.
Yeah,
one
they
of
just
their
ransomed the GPU people into it like Best Buy did with their awful program.
well, sure,
Mhm.
but and ultimately it worked because you saw there was a story that came out of that last quarter. One of their wins was that they got like what a little over 30% up
Yeah,
on
Power Up
GameStop.
Rewards membership grew 30% year over year
So
in
like,
the holiday quarter, which means people were signing up for Power Up Rewards Pro just so they could get consoles or just so
mhm,
they could get the GPU.
yeah,
Walmart's doing the same thing. Best Buy's doing that. Amazon doesn't really do that, but they have Prime, which is similar recurring revenue stream. I actually think Power Up Rewards is one of the better things they have going on. I think their app is actually pretty great. Uh, they've updated their website. But yeah, to your point about having shelf space, I don't think that's a fair criticism here because they are holding all that stuff at the factory, like, or sorry, the fulfillment centers. That's what's interesting here. Is GameStop like 5 years from now? How many locations of GameStop will there be? Is a really interesting question. But I think at the core of why people stay long this stock, I tell you myself, I want a video game retailer. I don't want to have to go to Target to get video games. I don't want to have to go to Walmart to get video games or Meijer
mm,
or whatever. Like, I think a dedicated comic book store is important, and I think a dedicated video game store is important. So it's like, it comes down to that. Like, do you believe that there is a need for a dedicated video game store or not? And then you look at the total addressable market of video game sales every year, and obviously take into account that digital sales are a huge headwind for GameStop. GameStop doesn't have a whole lot of share of this market right now. Amazon does, Microsoft, or the platforms do, eShop, PlayStation, Xbox, Steam, even EGS. So like if you look at all those companies, GameStop doesn't have a whole lot of share when it comes to software sales anymore. It just doesn't. So I think that that's like one element that people might be sleeping on. And I think I would just point out that some companies get to trade at a premium to their sales and not their earnings because people believe that down the road they will become profitable. And that's that leap of faith that GameStop shareholders are taking right now.
mm.
Is that you think that down the road they will be able to turn a profit. How? That's a great question. Because
Oh,
after that call, I had a few people ask me what I thought of it, and I was like, "There's some troubling stuff in here, and then there's also some like really good stuff in here." And
yeah,
I think that I just want to go back to the crypto thing real quick. Short sellers are terrified of shorting stuff that's related to crypto because crypto bros pile into stocks when they have any kind of crypto news attached to them. You saw it with Tesla last year. Remember when they started accepting Bitcoin and then again when they accepted Doge? Uh, these crypto bros don't really like stocks at all. So when they see a stock that is directly related to crypto, they buy it. And that becomes an even bigger cult because crypto is a cult too.
yeah.
But yeah, like a lot of this has to do with market psychology more than actual results crabs. And I think a lot of our conversations where you don't understand why stocks do what they do fall to that. It's like there's reality, there's like the actual results, and then there's what people think. And a lot of the time, what people think or what people believe or hope ends up determining the value of a stock more than the actual results. And that's weird. But that's just how things have worked ever since the stock market was created.
Maybe it was a bad idea.
Well, we're no doubt going to be keeping on talking, not only reporting on GameStop, but talking about it in weeks to come and probably months to come, given the way that things are turning.
Yep.
But we got a lot of other stories to talk about today. Do you have any closing thoughts on it right now, Asif?
I think it's one of the weirdest stories in the history of the stock market. Uh, I I understand where Chris is coming from with a lot of his thoughts on this. And I think a lot. I actually I'm invested in this company, so obviously I think it's worth owning here. But I think there's like multiple things going on, right? There's like this ongoing short squeeze. There's this like Occupy Wall Street like movement going on. There's this cult stock element. There's the actual company growing revenues. There's this NFT marketplace. So you put all those together this week doesn't seem that crazy, but I personally believe that the real thing driving price of this stock is supply and demand, and there are not enough shares for the shorts to buy. And that's why the stock's going up. And as all the diamond hands hold, it's like this is a battle being fought with one equity, but it's really about Main Street versus Wall Street, retail investors versus hedge funds. And until the retail investors give up, this fight continues. So I think it'll be years that we'll be talking about this. And I do think it's going to resemble Tesla, because Tesla had multiple short squeezes and crashes before it got to be $1 trillion company. Now, I don't think GameStop will ever be $1 trillion company, but it could certainly go higher than when it was valued at $6 billion last week. So yeah, that's it. And I gotta go find Bad Kitty and Xbox, probably like 4 other people. I forgot about
Sounds
that.
like you should go look at your local GameStop.
Well, thank you for stopping by, Asif. We appreciate your expertise on this topic. We are going to be continuing to cover GameStop and GameStop stock news. Stay tuned, y'all. But for now, Asif, we are flushing you.
You guys don't even have a flushing sound